How's it going, everyone? Thursday evening. Lawrence here. Financial Thing Livestream. Hope you are all doing well on this wonderful August the 25th evening for you, afternoon for me. Do me a favor if you can't hit that like button. Helps with the notifications on YouTube. Gets into the eyes of other people to spread the knowledge. That's what we're trying to do here with the Financial Think platform. Hope you're doing well. We're going to be talking a little bit about peer-to-peer lending tonight, some stock chatter, a little bit of crypto chatter at the end. It's been kind of a quiet week for peer-to-peer lending, but a few things I think worth discussing. Hopefully you're going to have some guests on the stream coming into September, give you some knowledge about possible updates on some companies, places to invest. And we're always looking for new places to invest. What we're seeing now, we had a Bank of England interest rate rise early August to 1.75%. And the benefit of that to us is we're starting to see some increases in interest rates. One second. Particularly Loanpad, which we've seen has an incremental interest rate increases. Not a huge amount, but 0.1% here, 0.1% there always helps out, especially since we've been in this low interest rate environment. Also, you're seeing your savings rate start to creep up a little bit. Not really battling inflation rates, but it's better than nothing. So we're going to chat a little bit about that and see how you are all doing today. Peer-to-peer lending. Let's talk about it. Have a quick shout out to everybody who is here in the stream watching. Welcome wherever you are. Carlin Perry is here in the Peak District. Peter Vince Leatherhead. Mark Mason, good evening to you and to everyone. Nice to see you. Robert Pates is in Greece, in Crete. Blooming. Been raining here too. Blooming. What does that mean? Does that mean blooming hot, blooming cold? Boo from London. Scared me there. Invest 22. Stephen Hale in Nottingham. Paul Bagworth is here in Kenilworth. Alan Stratford. Hi all. Of course, regular. Nice to see you. Mike Powell in Southampton. Hello. Hopefully not at the pub while watching this. Good evening to you, George Batchelor. Nice to see you. It's always nice to see the regular people. The Financial Think family. If you haven't joined the Facebook group, join it. You never know what's going to get posted on there. What else? Okay, let's just get right into it. I'm going to try to keep this stream short this evening because we all have better things to do, right, than to be spending too much time on YouTube. As much as I appreciate you, I do try to keep this concise and quick. So let's try to keep it under half an hour, 40 minutes today. We can always get it on catch up if you missed it. Here we go. Peer-to-peer platforms start to raise their investor rates. We look at the Bank of England official rate history right now. We are sitting at 1.75%. Look at these rates. They have been absolutely just rock bottom for a long time. It's been ridiculous. We started to see this dip August 2016 to just a measly 0.25%, and then a little bit of a jump up here in 2018 to 0.75%, and right back down again to 0.1%. Incidentally, this is where we started to see the, have to do the air quotes, transitory inflation. Of course, it was really started a long time before that. These were just the effects of it. And then we started to see this flat line at 0.1%, and then this step up, step. We see those rates really increasing. Now, still pretty low historically, if you think about it, but now you're starting to see some peer-to-peer lending companies now. At this point, you can see here the rates going back. Gosh, look where we were in the 80s. 13, almost 14.8%. Crazy. These interest rates now are just insane if you compare them to where we were back in the 80s. I mean, as high as 17%. Crazy. That was when you could put your money in the bank and get a lot of mwanga back. But now these historically low rates have been really punishing to savers. So they are starting to creep back a little bit. And what we've seen is a couple of peer-to-peer lending companies announce that these interest rates are increasing. Loanpad has said from September the 1st they will pay 3.1% on the classic account, and that the premium accounts rates will raise from 4.2 to 4.3%. So yeah, you're getting a little bit of a bump there. And then from October 1st, the returns on both of these accounts will increase by a further 0.1% each. So kind of getting back to those close to that 4.5% interest rate on the premium account that we saw with Loanpad previously, months ago, a long time ago. So starting to get back to that level, which I think is cool. And then we have Crowd to Fund recently raised its target interest rate up to 16% to attract more investors. Loans are now being offered through the Crowd to Fund website with target returns of between 12 and 16%. And then earlier this year, European peer-to-peer lender Bondora reported that its returns had exceeded its target during the first 6 months of the year. By May, the actual rate of Bondora's yearly portfolio performance had increased from 13.3% to 14.6%, almost 5% above its target rate of 9.7%. Now, I don't think I need to say this to you, but I have to say it. Chasing rates can be extremely hazardous in the world of peer-to-peer lending. Despite some companies offering these high interest rates like Crowd to Fund up to 16%, just please consider the risk involved if you're getting this type of interest. Remember, the borrowers are paying a considerable amount of interest on their loan, usually, not always, but usually indicating the level of risk that these peer-to-peer platforms consider these borrowers to be. So if you are new to peer-to-peer lending, you see these rates offered at 12 and up to 16%. Just ask yourself why that is and what is the current risk involved on loans like that, and are you comfortable with the risk with a possible area of default if that happens. We should, take a look actually at let's take a look at Loanpad and just see where things are with them right now. Things haven't really changed too much since the last time we looked a couple of weeks ago. So about 169 live loans, 9 lending partners. Again, these very important piece of information we look at: estimated time to sell and invest, less than 1 day, and the interest coverage fund is full, so no loans having any troubles at the moment. We have a loan to value of 140.48 million with a total of 69.3 million in Loanpad loans, which means the average loan to value on Loanpad is still only 42%. We see these lending numbers creep up. I think gone up a couple of hundred maybe since the last time we looked. So now into close to 4,200 investors, and we see these average lending sizes continue to rise. That means that people are becoming more and more comfortable with what Loanpad is offering. And for anybody that's been an investor with Loanpad loans, you just see it kind of ticks along, really no issues so far that I could see, which is a good thing. There are a few peer-to-peer lending companies out there that I think, again, are doing the right thing and doing well, and Loanpad definitely one of them. That's why my top 5 really never changes too much, because it tends to be those companies that are really keeping the path the same, not veering off too much, and providing a good service. Another company that I think is a solid place to put money right now, again, not financial advice, please do your own research, but LendInvest puts out this July 2022 platform fact sheet. It just kind of shows you what the average return offered, 5.1%. This is posted for loans in July. We had an average investment size for tranches 1.83 million, average loan to value 69%. You can see here, you know, the difference between loan to value you're getting on a company like LendInvest versus Loanpad. It's quite a big differential. You're talking about a 25% difference in the average loan to value, but essentially you're only getting 0.6% more through LendInvest than you are through Loanpad. So one does have to ask, you know, if Loanpad is offering an LTV, average loan to value of 42%, which would be considered, I would say, lower risk, is it worth putting in money at an average loan to value of 69%, a 5.1% average? It is good to diversify. You know, it's good not to have all your eggs in one basket, but if you're comfortable with Loanpad's offering, you think they're doing a good job, you have to look at those numbers and wonder, for 0.6% more, because they will, well, it's a little bit more than 0.7, 0.8% more. Is it worth it to have this hike in average loan to value? But I actually think that Loanpad will probably get back to that 4.5% interest rate within the next few months, depending on, of course, what the Bank of England does. And Loanpad is trying to remain competitive with their offering. If they go too high on their interest rates, they've got to remain competitive because there is a lot of competition where borrowers can go to get money. Loanpad remains one of the lower cost ones. But yeah, I don't know if it's really worth the extra 0.6, 0.7% in returns for this real bump in the 25% average loan to value. You have to ask yourself that question. Geographical exposure, we got London, a £7 million investment posted in July. So LendInvest believes that London is a good spot to continue to invest. A little bit over here in my old neck of the woods, Yorkshire and the Humber at 330,000, and then the Southeast 1.84 million. So we see LendInvest continuing really to focus on the London area. And on schedule, this is bumped up a little bit, 72% now on schedule. I think it was in the high 60s before. Arrears, loans in arrear, only 2%, 18% out of term. So this is a little bit higher than definitely I would like to see. And 8% under enforcement or legal action. Typical target returns are going to be between 4 and 5.7%. So definitely keeping an eye on these enforcement and out-of-term numbers here, 18% and 8%, because, you know, you like to see those in a much lower range. I think I'd like to see the out-of-term at maybe 7 to 10%, enforcement 4%, 5%, something like that. For that kind of interest that you're getting paid, I mean, we're not talking about a lot of interest here. We're talking about 5.1%. You got to keep an eye on these types of out of term and enforcement numbers here. So there you go. What else we got? Jason Ferrando named Easy Money CEO as the platform surpasses £200 million. So they've got a new CEO who took over from Andrew de Candolle. That's a very powerful name. Andrew was the chief executive on the platform since its launch in 2018. So, you know, Easy Money is a pretty new company. They're coming up on 4 years old. He is still part of Easy Money. We're not really sure what his new role is. And the new Jason Ferrando's appointment comes as the peer-to-peer property lender announced it passed 200 million in lending milestone just 6 months after breaching 150 million. So they continue to add to the loan book. They've added another 17 million they've earned for investors 13.7 million in interest payments alone. Looks like they've had a continuous inflow of ISA transfers. A lot of that comes from some of these platforms that are closing. And now they're aiming to achieve the £300 million mark in early 2023. Now, Easy Money is one I get asked a lot about, and I just tell you, I haven't really been that interested in their offering at the moment myself. I think we looked at it before, but it says you can get a target rate of up to 8%, which is definitely, it's attractive. I think in order to get that, though, you do have to put in a ton of money. So you got to put in £1 million to get 8%. Most of us are going to be in this probably premium to premium plus range of 10,000, or I would say actually most of us classic up to the premium plus of 20,000. Even when you're putting in 20 grand, you're getting 5.02%. So, for me personally, I just didn't really seem that attractive. Yes, it's got the easy money, the easy brand. Everybody looks at it and go EasyJet, blah blah blah. But I'm always looking at these target rates and thinking, is it worth the risk to reward of what I'm having to put in to get that back out? I would probably be in this 3.08% range, and I got to tell you, that price, that interest return, not particularly attractive for myself. So there you go. This was a Loanpad update, again showing how these increases are going to come into effect. So if I can zoom this. No, let me zoom. It's not gonna let me zoom. Hang on one sec. Well, you probably can't read that. Here we go. Zoom. There we go. Yeah, now it's really big. These are the interest rate increases. 1st of September up to 4.3% the premium, which I currently use myself. I'm not really using the classic at the moment. And then 1st of October premium will be 4.4%. I do expect that is going to hit that 4.5% eventually. Loan book performance, there are now 166 loans within the portfolio. And due to daily diversification, which Loanpad does for you, means the average loan will just represent only 0.6% of your invested funds, and that all loans are currently in good standing. So that's 169 loans that are in good standing, and it says we do not foresee any material issues with them. They have a very healthy pipeline of new loans and anticipate the number of loans continuing to increase. It is worth noting that every portfolio in the loan is no more than 50% of the current value of the security we hold. The average loan to value is just 43%. So Loanpad putting up some really nice numbers there. It's good information. I realize it seems like I'm a bit of a fanboy when I talk about Loanpad a lot, because honestly, it's not that I'm trying to necessarily push Loanpad. I mean, it doesn't matter to me whether you invest or not, but when I see a company doing good things, I just have to highlight the things they're doing. So here we go. This one is from Assets Exchange. It says, "Hi Lawrence, £1 million milestone in income paid to investors has been exceeded this week. We thought you'd like to know we've reached an important milestone of returning income of £1 million. That's pretty cool. We'd like to thank all investors and shareholders for their continued support. They have a current pipeline of property in the region of £9 million with an estimated launch yields of between 5 to 6.5%. So it won't be long before we reach our next milestone." So Assets Exchange, again, one of the companies I think is doing very positive things right now. They have paid back £1 million of income to you, the investor, which I think is super cool. What else? What are we going to look at? Let's look at the Trading 212 portfolio, because it kind of hit a milestone myself this week with the portfolio. I was really struggling to get this portfolio. Just remember, start at 5,500. We've finally gotten over this 20,000 milestone here with the portfolio. So super happy about that, because again, it means I can give more money away to charity, which I love being able to do as this portfolio increases. And what has really changed in the portfolio? Well, it's just become more concentrated, which obviously would increase the risk of the portfolio. More concentration, less diversification means it's going to have bigger swings. But if we pick the right companies to invest in, this can really pay off. And you can see here, Arch Resources is starting to really pay off. We're in the 15.49% in the green. And what I've been doing with this company is taking profits when this stock has hit new highs. I've just been withdrawing and waiting for a bit of a pullback. So our average buying on this stock was at $149.62. Now you can see the stock price is at 166. I think Arch has got a very, very bright future. Again, not financial advice. Please don't copy me. This is just what I have done in this portfolio. And pulling away some cash here. I think I've probably pulled out about 1,500 pounds of money as the stock has come back up. So we got some free funds here. Also, one stock that I did get rid of, which I was not planning on doing, but I got rid of the Zim shipping, which was in the red. Did some more research on the company and thought, there's some things about this that I don't really feel comfortable with in the long term, even though they're paying this massive dividend of $4.75 per quarter. But I think there's just better places. I think even just these 5 stocks could do better than Zim because of some of the things that I read. But yeah, you can see everything in the green right now. Flex LNG. So what are these companies? Arch Research is a producer of coal and metallurgic products for the steel industry. I think that's going to be good definitely until the end of the year. We got Cenovus Energy, the Canadian oil and natural gas company. I like Canada. I like Canadian oil companies because they are not so at risk of the crazy governments of the world, like the US, pulling in some regulations and really screwing up their profit ranges and the way they can operate. So hence Cenovus, the Canadian. We got Flex LNG, which is seaborne transportation of liquefied natural gas. If you watch the economy and you see what's going on with the price of energy, natural gas has just kind of been going through the roof. This company transports it, so naturally I think they're going to do well because of that, and they've produced a return of 47.36%. We got International Seaways. Of course, it operates a fleet of ocean-going vessels that transport crude oil and petroleum. Again, everything tied into energy, gas, petroleum at the moment. This is not going to last forever. I'm not even sure this lasts till the end of the year. Maybe tech is going to be the way to go, but for now, just continuing to really stay put with that. And then finally, another Canadian, again, company headquartered in Calgary, is an international energy producer engaged in the business of crude oil and natural gas exploration, development, acquisition, and production. So you can see this generally the same types of companies except for Arch, which is coal-based. But yeah, the portfolio has done well if you look for the last month. We took this dip right here, and also because some of the money got withdrawn to sit in cash. As you can see, this is why it is. If you look here in the last week, this dip right here, portfolio was at 19,198, took out some cash, sold Zim, now sitting to wait for a pullback with Arch, probably to deploy some more money in there, or maybe just spread it across these 5 stocks, depending on what the market does over the next probably week or so. But yeah, this is the highest value the portfolio has been in. There are some things that are going on in the economy, specifically in the US, that I think are really troublesome. We have Mr. Biden, who decided to cancel up to $10,000 in student loans. I would think this might happen in the UK too at some point, where these students have just got themselves into so much debt and they can't pay it off. I mean, there's trillions of dollars of student debt. I know it's getting worse in the UK too. So what happens is Mr. Biden decided that he was going to forgive up to $10,000 in student loans and up to $20,000 for Pell Grant recipients. And we're talking about 43 million people who might qualify for this loan forgiveness. So basically, it's just going to wipe out that amount of student loans, which is crazy to me. I mean, and what's crazier is this plans apply to Americans earning under $125,000 a year, or $250,000 per year for married couples who file taxes jointly. What does this even mean? Why do you care about this? You most of you living in Europe or in the UK, I'll tell you why you want to care about this. First of all, it just shows that the money printing machine that is going on is just continuing. You see this idea of quantitative tightening that the government has said, we're going to stop with the money printing, we're going to ease back, and then the US government says, oh, you know what, well, forget that, we'll just hand out money to people so they can pay off their student loans, even if they make $250,000 a year as a married couple, which is crazy to me. You're going to give them forgiveness. They make $250,000 a year. You can't pay off your student loans. Ridiculous. But what it means is they're continuing to print. This is why I don't see this inflation problem getting solved anytime soon, because I think the governments of the world are going to continue to print money in different forms. You know, they stop the quantitative easing, but then they just decide to print money in a different fashion. And again, you know, why does that matter? Because it's going to mess up the stock market at some point. It's all going to come crumbling down. This money printer cannot continue. It's just very, very ridiculous. You got 43 million borrowers who will benefit and 20 million who will have their debt completely canceled. I mean, if you just do basic math of 43 million people who will benefit, you're talking about trillions of dollars of aid towards paying these loans off. Somebody's got to pay for that. You know, who's going to pay for these $1 trillion? Well, it's ultimately going to be the taxpayers. Some borrowers are celebrating, others hope for more. Many borrowers are celebrating Biden's announcements. Giselle Parks of Orlando, Florida, expects to have a $5,000 in student loan debt completely erased. Holy cow, I need to tell my family immediately. This is really just an election play, too. We got Mr. Biden. He's going to be fighting for his election life, and to me, this spells, let me give the people some money so they'll like me, because I think he's ultimately going to lose his spot at the White House. But this is going to continue being a problem with all this money printing, which is why I keep saying we need to have things like other investments, like cryptocurrency, that's totally decoupled from the U.S. government, because they, or even just governments around the world, not just the U.S., but they keep making these boneheaded moves that are going to just devalue your currency. I mean, look at the pound versus the dollar. It used to be about 1.5, and now it's down to one. Last time 1.18. Everything is just getting devalued. So what's going on? Let me talk a little bit about cryptocurrency, because I haven't done it for a while, and I haven't been streaming on Tuesday. And I had a couple of emails yesterday saying, what the hell's going on with Bitcoin? You said this and you said that. Nah. Well, you know what? My stance has not changed any bit on Bitcoin. We're seeing this price right now, action of $21,528, with Ethereum producing pretty good numbers. Now, if you remember, when everything crashed in the crypto market, everyone was saying it was all over. And now we are definitely in a bear market, but you could have scored yourself some Ethereum down here if you understood what this damn cryptocurrency is. You could have scored yourself some in the $897 range and doubled your money. This is within 3 months. Now, a lot of people won't do it because they don't understand what Ethereum is. They think it's gambling. They think it's worthless, blah, blah, blah. But it's not, let me tell you. We're going to see this big Ethereum merge that is coming in 20 days, 11 hours, 59 minutes, just over 25 seconds. And that merge is going to change Ethereum now, a cryptocurrency, to proof of stake. So instead of mining it, using the electricity, damaging the environment like Bitcoin does, now it is going to be a proof of stake coin where you will receive a interest on the Ethereum that you stake. So that's going to change the entire Ethereum and probably the entire crypto market. But honestly, the fundamentals of Bitcoin have not changed. We see now a circulating supply of 19.1 million as we head towards that Bitcoin 21 million cutoff. This price right now is in hibernation. I consider it still absolutely a bargain. My theory has not changed on Bitcoin at all. It will continue to have a place in my investment portfolio. I continue to buy at these prices when I have money, because I think we, in the long run, we'll never see a price like this again. It may dip lower. It may go down into the $18,000 range, but I'm happy to buy here. I'm happy to buy 18,000. I'm happy to buy at 25 or 30,000, because honestly, the fundamentals have really not changed at all. It's just the sentiment. People right now are scared. You know, it's casual human being sentiment. When things are dropping, they run from it. When things are firing upwards, you know, if you saw Bitcoin go to 28, 30,000 tomorrow, everybody would be jumping back in. 40,000, everybody would be ecstatic. But when prices are low, this is where you make money. We all know this from stock market investing. We all know this from, you know, if we looked at these stocks such as Arch, even when it was low, a year ago, you could have bought down here at $67, right? Was anybody buying Arch back then? Probably not. Was anybody buying it here? Nowadays, you know, these retail investors were scared of Arch, scared of a lot of these companies that were in these pretty low rates. A year ago, you could have absolutely 3x your money if you'd have had the foresight to come in here when the prices were going down. But we are emotional human beings. We buy when things are going up. We sell when things are going down. You got to do things the opposite way. And I think cryptocurrency is exactly the same way. If you had the foresight to get in when prices were dropping, you know, Ethereum at $897, you doubled your money. You know, the same is going to happen here, I believe, with crypto and Bitcoin. We have a lot of problems in the economy. These problems are not going away. And, you know, this is, I think, a veritable long-term solution to some of these issues. But that's just my opinion. Again, please do your own research. I am not the god of investing. I'm just a retail investor like you who does his research, gets it wrong 47% of the time, gets it right 53% of the time. That's all you need. You just got to win a little bit. Now, I don't know what those statistics are. I'm being facetious when I say that. But do your research, because there are some really great opportunities out there. And if you don't have the time or patience to, you know, do your own research, just buy index trackers, because I still buy those too. Those will take care of you in the long run, as they have continued to do since the 1970s. And yes, I still buy the Vanguard index tracker. In fact, you know what? Let's look. Let's see where our Vanguard index tracker is today. So I have not looked at the price in a while. I tend not to look too often. I think it's good not to stare at these things too much. That's how you get freaked out. Start seeing the prices drop. NAV here for 768 pounds, and 97p is the price of this tracker. This is the US equity tracker that you can buy through Vanguard UK. 4,064 stocks. So look at the historical prices. Oh, do we have a discount right now? A month ago, what was the price? You could have picked this up on the 26th of July, 711 pounds. So right now it's at 768. So you're 50 pounds in a month. So about 8%. We're almost at a 52-week high. It is feeling toppy, but we'll see what happens. You just keep an eye on things and hope that everything just doesn't go into the toilet too fast and you have time to react. But, you know, for most people out there, just stay invested. That's all you got to do. Don't worry about these dips. How long have we been going for? 40 minutes. Okay. Hey, if you can, hit that thumbs up if you're enjoying the stream content. Hope you are. I know I'm talking kind of quick. I'm trying to get through this quickly today. I don't want to keep you on here for too long. Give you the information. Dan Barber's here in High Peak. Patty, Jeff Day. Nice to see you, Jeff. Are you in France? If you are, bonjour. Alan Brooks from Harrow is here. Anyone with crowdfund? I am not. Don't have any experience. Any referral links to Loanpad? Yeah, let me give you, I'll put my referral link. You can go to the Financial Thing website. It does help when you sign up through the website. It helps me, it helps the channel. Let me give you a link here. Put it in the chat. Sign up and get yourself some cash back before the FCA says no more. Put the link in the chat. Or you can go to the Financial Thing website, click on the referral cashback up here on this menu option up here. Hang on. You zoom in. See up here. Go to the cashback page, and then there's some links here. Loanpad being one of them right here. Boom. You can sign up right there. Appreciate your support if you do. I don't think the FCA ban has come into effect yet. If I'm not wrong, I think it's not going to come into effect till 2023 on referrals. Patty says Loanpad is tops for me. I've lived through 3 major recessions. I am a cautious investor. That's good to hear. I get the lowest rate. Robert Pate says with easy money, but it's always been paid. Well, good. Easy money is misnamed. The thing about easy money is the access to benefits, which bumps up the return significantly. If you use the discount vouchers for groceries, my return is 6+% if you factor in the money saved. Are there any firm dates for your upcoming guests? Not today, but I will announce them as soon as I get them. You got to understand, these people are really busy, and sometimes they can only let me know a week before it's going to happen. But as soon as I know, I will send out an email, and you will know. MasterCard supporting Bitcoin payments with credit cards in Argentina. Cool. I like that. Any positive news when it comes to Bitcoin? All right, well, 42 minutes. We're going to get out of here. Thank you very much for joining. I hope you enjoyed the stream. Again, hit that thumbs up if you haven't subscribed to the channel. Be back next Thursday, if not sooner, with another edition of the Financial Thing peer-to-peer lending live stream. You guys have a great weekend, okay? Enjoy this beautiful August British weather. And I will see you guys next week. Take care. Bye.